Hello everyone and welcome back to the innovation stage at FTT Building Societies. This is our final panel of the day, which is titled Dreaming of the Future, Exploring Financial Service Opportunities Post-Pandemic. And just as a reminder, please post any comments and questions in our chat box. So I'm Jess Major, Product and Growth Manager at VC Innovations, and I have two fantastic panelists here with me. Robert Thickett, Digital Policy Manager at Building Societies Association, and Jonathan Moore, CEO, Stockport Credit Union. So hello and welcome to both of you. Would you mind providing us with a quick intro, starting with Robert?
Hi, my name's Rob. I've been at the Building Societies Association for 7 years. I started out as a mortgage and housing policy advisor before concentrating on digital, and before that I spent 11 years with a financial journalist. I just want to kind of quickly introduce the Building Societies Association as well. BSA has been around since 1869, and we currently have all 43 UK building societies as members, and also 6 credit union members as well. Those credit unions that have expanded into mortgages. BSA is owned and run by its own members, and we're a forum for debate and representation with government and regulators. And in addition to our kind of annual conference in May, we also host training and events like our Digital Mutual throughout the year.
Great, thank you. And Jonathan?
Hi everyone, I'm Jonathan Moore. I'm the Chief Executive of Stockport Credit Union. I've been doing the job for 2 years. It's a small credit union with a lot of ambition. When I took it over, there was a whole load of issues that needed fixing, and it needed to go on a modernisation journey. And that's where we've been for the last 2 years, moving it forwards, getting it ready for the 21st century. In addition to that, I'm also a mortgage broker, and I'm an AR of a mortgage network. So I've got a unique perspective on the mortgage side of things from the brokerage end of the market. And prior to all of this, for 20 odd years, I worked at 3 different building societies, always on the mortgage lending side, in various roles, but moving up to being head of lending at the last of the 3 building societies.
Great, so thank you for your introductions. We have quite a lot to get through today. So let's start at the core of mutual organisations with the customer. So my first question is, how have customer expectations changed over the past year or so, and how do you think their expectations will be influenced in the future?
Well, the journey has been actually happening for longer than just the last year or so, but of course the pandemic has made further changes to add to that journey that's already happening. There's been an interesting period for all of us in terms of how we run our businesses and how we actually manage to get the core lending done, or whatever service it is that the building societies are providing. Going back quite some time, the way, of course, that it operated was far more face-to-face and a much less digital way of operating, and that had been that way for decades, if not the last couple of centuries, for building societies, and obviously in credit unions' cases for 30 years or so since they started. But things are changing, and customers are expecting to see quite a different interaction than they've been used to, and that's been brought about by a whole range of things. And probably where it starts is with their own banking arrangements, because increasingly customers are now going online to do their own ordinary day-to-day banking. They're getting comfortable with using technology, and consequently they're expecting that to spill over into other parts of their lives. And if you look at the younger end of the market, the millennial end, they actually are probably moving on still further. They are increasingly less comfortable with telephone-based interactions, and they want to do everything online. So looking forwards into the future, the expectations are going to be quite different. They're going to expect significantly better service, and they're going to demand that, and they're going to vote with their feet unless they actually get that. They're going to expect more digital interactions. They're going to expect processes which are designed with modern ways of working in mind. And I think the challenge for mutuals is that they're going to be probably less focused on the mutuality side of things, unless that does dovetail with their overall expectations.
Great, thank you. And Robert?
I think, well, the kind of pandemic has clearly changed radically in terms of transactions and purchases. And I think it's had a knock-on impact in terms of building societies and how they engage with their customers. But I think the foundations of building societies still remain that community aspect. The first building society was 1775 in Birmingham, and Ketley's building society. And there's communities coming together to kind of purchase, to save money, to purchase or build their own home. And I think that the kind of the truth is that funding model, with some bells and whistles, remains the same. And we're still seeing branches as very important kind of parts of building societies operations that will differ across different building societies. We have members that have no branches, and we have members that have kind of extensive branch networks. But I think they kind of will continue to be important opportunities for kind of communities to come together, and that is the key part for building societies. We're the core products are savings and mortgages, not kind of a transactional current account. Apart from two building societies that have that. And I think that is kind of a key differentiation and a key bit that kind of does set the market out compared to other banks. There will be kind of different approaches across the sector, but I think it's kind of how do you dovetail the kind of technological aspect, which I think we'll come on to, and we've heard about a lot today from the likes of teachers and Nottingham Building Society about kind of how they're digitally transforming their services. I think it's kind of how do you, as Johnson said, how do you bring in millennials? And also we did some research this year with Whitecap Consulting, looking at kind of where building societies and mutuals in general kind of go from here. And I think it's how do you refresh that mutual model rather than necessarily dumping it. There still is a lot of value to younger consumers about that as well. We get an awful lot of feedback around younger consumers want to deal in person as well and in branch. So the kind of core elements of building societies still have value, and it's kind of how are they refreshed using digital? How is there kind of greater efficiency via different services to make processes better and I suppose cheaper as well?
Yeah, definitely. Thank you for that. And something that's been covered quite a lot today or touched upon in some of the sessions is that there are some common challenges that building societies and credit unions are facing. So we'll start with you, Robert. What would you say are some of the key challenges that building societies are facing as we kind of move out of the pandemic?
I think we're looking at building societies in general. We have they are big in mortgage lending, and it's a hyper competitive mortgage market. And I think you can see kind of digital differentiation coming as well as kind of product differentiation as well. And mortgage intermediaries, as Jonathan will know, are a big part of how the kind of mortgage market operates. I think it's kind of 3/4 of all mortgages are via mortgage intermediaries, if not more. And you can see that sort of intermediated or disintermediated, depending on your view, will only kind of get bigger. And I suppose how you can kind of create that customer journey for mortgage intermediaries and kind of the end consumer as well will be key. The other challenge, I think, especially at the moment, is around the negative interest rate environment and kind of how that's managed around savings. And I think also the kind of big one being around transitioning to that digital future. And as I said, kind of replicating that community aspect in digital as well, and realizing, I think, a lot of the opportunities that are out there, just looking down the track, there are going to be big changes around, say, AML in terms of digital identity and the government's trust framework. There are big changes coming down the track in terms of, it's not the kind of sexy front end bit, but in terms of regulatory reporting and data transformation. These are all bits that are going to kind of be big innovations internally, and I suppose it's how the opportunity and challenge is how mutual organizations of all types sort of realize that interoperable data and digital future.
Yeah, definitely. And Jonathan, I guess there's some kind of common challenges and then maybe some different ones that credit unions are facing at the moment.
I think the core common challenge that affects building societies and credit unions is that we are up against competitors who have got much deeper pockets than we have. And that's the same whether you are a medium-sized building society or a tiny credit union. And there is innovation going on and there is investment going on from the for-profit alternatives, which we can't even begin to match. And we therefore have to find a way of doing things differently. And in the past, doing things differently, certainly in the building society side of things, was to concentrate on finding niches that the bigger lenders were perhaps not so interested in. But of course, that's changed over the last few years, and the big lenders are now increasingly interested in niches as well. And from the credit union side of things, it's been about the personal touch, and it's been also about building savings, because that's something that our for-profit alternatives are just not that interested in. So the credit union side of things does have something unique to offer, but it doesn't help in that there's still a demand there for lending from organisations that do have the pockets to make sure they've got the marketing campaigns in place. So for all of us in the mutual sector, regardless of whereabouts exactly we sit in the sector, we have to find a way of taking the fight to the competition, because ultimately it is about market share. It is about actually doing the lending that will keep the businesses afloat and able to invest in the future. And I believe that digital, in various different guises, is the way forwards. The big lenders on the mortgage lending side, they might have invested, but a lot of them haven't invested particularly well, and their platforms are not that easy to use. So coming back to one of the questions earlier on about how do customers' expectations change, of course we shouldn't just think of customers as purely members, although often it is that, but customers in this particular context can also be mortgage brokers as well who are not members, but their needs still need to be looked at. So how can we provide a platform for our members and our customers that is attractive, easy to use, slick to use, requires a minimum level of input, is consistent, and is welcoming. And I think this is one of the areas which is going to be a challenge for all of us going forwards, to ensure that we can actually really compete. And the great thing about some of the digital changes that are happening is that actually they're not that expensive in the grand scheme of things. Certainly from the credit union side of things, we've gone through a digital transformation at our end, and actually the cost so far is probably less than one person's salary per year. And the value we're getting from that is absolutely enormous, and it's really allowing us to compete. So it's quite an exciting time. There are a lot of opportunities out there, but all of us in the mutual sector have got to be alert to those opportunities and take them seriously.
Yeah, definitely. Well, moving on, my next question is about mutuality, which is something that is bringing us all together today. In what way, do we need to reimagine what mutuality might look like in the modern age? And we'll start with you this time, Jonathan.
I personally think it should look like outstanding customer service. Yes, certainly it needs to be innovative products as well, and it needs to be having good platforms for use. But the thing that certainly on the mortgage lending side that lenders find really difficult is to give consistent, good quality customer service. Everyone can do it for a period of time, but it's very hard to maintain it. And from the credit union side, well, we do have a focus on members, certainly, but I think sometimes we imagine what we think customer service ought to look like, and it's not necessarily what our members actually think it should look like. So it's not necessarily about running a collection point from the back of the church hall, even though that's traditionally how it has been. It is about having a 24/7 platform that allows the member to start their journey using various bots to get them a certain distance down it, and offering fantastic turnaround. And just to give a little anecdote of that, when I took over Stockport Credit Union, our turnaround time for a loan application was typically 7 to 10 days. And I was just astonished that this was where service appeared to be. And using a whole variety of different things, not all of it digital, but certainly part of it digital, we've managed to get that down so that a lot of our loans now are same day turnaround. And that's where we need to be in the sector. In the building society side, it's just the same. There are some building societies that can turn around mortgage applications more or less immediately, and there are other ones where it joins the end of a pile and it takes 2 weeks or more. Those days are either gone or at least very close to going.
Yeah. No, that's very interesting. Thank you. And Robert?
Well, I'd just like to kind of echo what Jonathan's saying in terms of outstanding customer service. And I think I've already seen examples with our members where they're using things like artificial intelligence and digitization really to kind of transform how they engage with customers around sort of mortgage lending. And I think Jonathan's totally right in terms of the expectations among consumers and intermediaries is only going to increase and only get higher in terms of the kind of turnaround times and efficiencies. And I think we're also going to see coming into the market kind of lots of fintechs that will be providing kind of insights and speeding up different elements as well. Jonathan, when we were kind of preparing for here, talked through some of the fintechs they are using at Stockport Credit Union. I think it's kind of really realizing all the different aspects out there, and it's such a competitive market now in terms of the different mix of different technology providers. There is a kind of much greater opportunity out there now in terms of, as you say, kind of realizing opportunities and speeding up processes. I think in terms of reimagining mutuality, I think there's also kind of the strong social purpose aspect of building societies as well, and actually how digital channels can be used to kind of really engage with consumers on much greater range. We've had members who are really starting to use their mobile app. So we heard of Nottingham Building Society today with Beehive, I think, and we've also had Tipton and Cozy over the last year. They've launched their own mobile app and they're engaging directly with consumers. And I think for many of building societies, they are looking to see how they can kind of engage with members in a different way and using kind of digital channels to kind of connect with customers in a different way and to bring in sort of millennial customers as well. I think that would be kind of the way society will really look to that, really expand out that concept to a kind of greater number of future members.
Yeah, definitely. And as you touched upon earlier, there are a lot more technologies available and a need for kind of improved efficiency in to changing customer expectations. So I think something that might be important is collaboration between building societies and also within the credit union space. So firstly, for Robert, what level of collaboration is there across building societies and do you think this might change in the future?
I think building societies are fundamentally a network with a shared ethos, but they're also kind of incredibly competitive, independent organisations in their own right, and they all have different strategies, different objectives. Their members are not kind of a homogenous mass. They're all got individual aspects to them, and they ultimately know their members and the needs of their members in their local community as well. And that's something I think that really resonates with membership in terms of why they go to a building society in the first place. There is lots of sharing of ideas and experiences, but I think that kind of competitive element, especially around things on the mortgage lending, where it's so competitive, I think there's well over like maybe 120 or 130 odd different lenders in the market, and yet about 80% of all mortgage lending is via the top six. So it is a ferociously competitive market. So there's good reasons why there hasn't been so much collaboration to date. But I think, especially around some of the big technology projects and looking at some of the new digital providers, and they're talking through about having tenanted services and sharing services as well. And I suppose the kind of concept of software as a service, which is completely different to kind of where people have monolithic systems that were kind of hardwired into their buildings. There will be maybe, as we go on, a greater opportunity to have collaboration. But I think for some of the kind of competitive reasons I outlined, I think it has been limited to date. But who knows what will happen in the future.
And Jonathan, does the kind of level of collaboration differ between credit unions, and what are your what do you think is going to happen in the future with that?
Yes, it does. The credit union sector is somewhat different to the building society sector, although there are parallels. So when I was working in the building society sector, I remember going to various meetings at the Building Society Association offices, and we used to discuss all sorts of things that were really useful to talk about, and there was a sharing of knowledge, but there wasn't formal sharing of ideas and processes. In the credit union sector, I think we're probably a step further on, and I think that's a case of we have to be, because in the credit union sector, the staffing numbers are even lower than they are in small building societies, and it's very difficult to actually do all the various things that have to be done, particularly on the regulatory side, when you've only got half a dozen staff. So in Greater Manchester, which is where I operate, we have a consortium of 8 credit unions, and I'm vice chair of that consortium. And we meet once a month at least, and we talk about all sorts of things. And we are starting to collaborate on things like marketing. We're talking right now about possibly collaborating on compliance work. And this is a really important area for us, because it's very, very hard when you are a tiny credit union with a minute budget to actually do any of these things to the standard that today's society requires you to do it at. And I think there'll be a lot more collaboration going forwards. And I would urge the building society sector to look at doing something similar. I don't think that it's got as far as it can do yet. Clearly, there are commerciality aspects which have to be looked after carefully. There is competition there, but at the same time, there are things that don't really have a competitive edge to them, where I think there could be much greater collaboration going forwards. Within the credit union sector, the consortium in Manchester is relatively unique, although there are other similar arrangements in some other parts of the country. But there's still quite a lot of credit unions that are not really working that closely with other credit unions, apart from maybe the nearest neighbour. And for credit unions, I would certainly urge a much greater level of collaboration, because I honestly believe it's the way forward. There's no point in everyone else reinventing the wheel when there is another credit union just down the road that already probably has the answers that you're looking for, and that then frees you up to get on with doing the day job and actually delivering a better service to the members.
Definitely, and I think
just kind of oh, sorry.
No,
sorry, I was just going to say
that.
Oh, right, sorry. I was going to echo that about with the Bank of England's data transformation program. I don't know if it's been mentioned too much today, but that is something that's kind of come across there in terms of compliance, and how not just kind of mutual organisations, but financial services in general, how they can share expertise in terms of regulatory reporting and other compliance functions. Because as Johnson said, there's no real competitive element. Well, I think it would be amazing if somebody could compete in terms of their compliance standards. And I think this is something, it's a 5-10 year project that the Bank of England and Financial Conduct Authority are working on. And I think it would be interesting to see kind of how, whether that will kind of promote collaboration within the wider sector.
Yeah, definitely. And I think that is one of the kind of key themes today at FTT Building Societies is maybe collaboration, but also learning from others' journeys with digital transformation and what they've kind of come across so far, any challenges that they've faced, any opportunities and success stories. So it's great to hear from building societies and credit unions of all sizes, just to kind of hear their own experiences. So for the final question of the day, it's going to be a 2-part question as we look to the future of financial services, in particular the mutual sector. I have a 2-part question, so we'll start with Jonathan. And do you think that the rapid change that we've seen during the pandemic will stagnate at all? And also, what's next for the mutual sector?
I think there is a possibility that there is a risk that it will stagnate, because I think we were all forced into innovation and rapid development because of the pandemic. Just to give an example from my own credit union, we were incredibly manual, paper-driven before the pandemic. And in a very short period of time, we had no choice but to bring in innovation that would have come, but it probably wouldn't have come in the space of a couple of months, because that was what was needed to actually keep the business afloat. So probably there will be some organisations that revert back to their comfort zone to some extent. They'll be heaving a sigh of relief. The pandemic's nearly over. We can get back to things as they were. But actually, that's the wrong approach. We've demonstrated now a whole new way forward, and we've got to do better. We've got to take the fight to the competitors who have got a deep pocket, and we've got to the mutual aspects of it. Certainly, we can't just assume the innovation part doesn't really matter more. We've proven we can give better service. We've proven we can attract new members. Certainly in the last 18 months, we've attracted record numbers of members in Stockport, and I very much expect that will continue. I think the mutual sector has a rosy future ahead of it. It's got roots that date back 200 plus years. It's got to be doing something right to have lasted that long, and it's certainly been through some turbulent times. We had the whole demutualisation thing in the 1990s, and we've moved past that now. And certainly the trend is towards bigger rather than smaller, and I think that trend will continue. Looking ahead, maybe 10 years, how many credit unions do I expect to see? Well, it may be 100, which is perhaps a third of where we are today. How many building societies? Well, probably not as many dropping off the radar because it's a smaller sector to start off with, but I would probably put money on the fact there won't be as many as there are today. Is that a bad thing? Well, it's only a bad thing if that displaces members, and if the consequence of that is that the mutual sector is smaller. I actually think it's a powerful thing if the consequence of that is a stronger sector with more members receiving better quality services and products. And I don't really see the reason why that shouldn't be the case. But it won't happen by itself. It won't happen by accident. It will require the next generation of leaders to really embrace where we are, run with it, and develop it. We've got some amazing challengers, like challenger banks, for example, who are doing incredible things. We've got to do the same, but we've got to still remain member-centric. We've got to explain to our members and our customers why it is special and what it is that we can offer that a for-profit alternative perhaps can't offer. Just as an example of that, I'm trustee for a building society which has a charitable foundation. That's an amazing piece of work, and I know there are several building societies doing something very similar. That's the kind of thing which really demonstrates the commitment to the communities that building societies operate in, and I know some credit unions are exploring similar things. That's very much where the future is for me, and provided we can deliver the services and products at the same time, then why shouldn't we be doing great things in the communities? Because you won't get your average for-profit alternative doing that kind of thing.
Mm. And Robert, do you think that the rapid change will continue to move at a fast pace, or do you think things will slow down? And what are your predictions for the future of mutual banking?
I think that the kind of rapid change, maybe we've seen, I'm sure there will be some slowing, but I think the key challenges in terms of connecting with customers, driving efficiency into organizations to try and ensure that organizations can continue to connect and meet the needs of their communities will mean digital transformation will remain front and center for many different organizations. And I think how they kind of express that and the kind of solutions they come up with will be all very different. But I completely can agree with Jonathan in terms of there is a tremendous opportunity for the building society sector and credit unions in terms of using technology and kind of using that as an opportunity to promote mutuality as a concept and connect with customers, because at the end of the day, it's those customers that need the solutions out there. And actually the way they treat customers really does resonate, and providing that community aspect as well. And I know there'll be kind of negative views around sort of potentially branches, but there still is a strong need among consumers to connect on a human level. And I think you're still going to see, it'd be interesting to hear Jonathan's views around this, but around that need to have branches and to connect with customers day in, day out.
Yes, I agree on that. It's an opportunity for the sector to provide something that isn't being offered so much nowadays by the commercial alternatives. I do wonder whether there is an opportunity for building societies and credit unions to collaborate and share branch space. We particularly in the credit sector, we find it very hard to find the right outlets, and building society branches are used, but maybe not fully used. And there may be an opportunity for some building societies and some credit unions to do something together which uses that space, because ultimately we're not competing on the lending side, although maybe we are competing to some extent on the savings side. but the lending products are very different, and there's pretty much no overlap. So it would be a great opportunity, and at the end of the day, we are all membership organisations.
Brilliant. Well, thank you so much for joining us, Robert and Jonathan. Thank you for sharing your fantastic expertise and insights around what the future of the mutual sector might look like. Stay with us. We have a brief closing session coming up following the panel.